So I'll pick up a very basic point just for the benefit of our viewers here. How should you approach the gap down now? Is it too late to buy, or are we in for what could be called as an unexpected but a early Santa rally? Kunal, we had a monster rally on Friday which shook the bears. Today's gap up start will force them to run for a cover. For those who did not buy on Friday and perhaps have an option only to buy after a 400-point gap up start, what should be approach for a trader?
So I think the approach should be to look out for solid large cap names, beaten down stocks, large cap space again, to try and get back into a trending mode. So what happens is after a 3,000 point plus kind of a correction for the index, we at 24,200, 300 thereabouts, we are at a point where 1,000 points have been recovered. So, but there's still 2,000 points yet to be recovered for the index. But what happens is that many of the stocks have been beaten down significantly, 20%, 30%. So you might see a 2% to 5% kind of a gap up opening for many of the stocks. But eventually, I think if you're looking out for a play of trend, then I think even buying a gap up, at least 50% of your expected quantity could turn out to be a decent strategy.
Same question to you as well. How would you approach the gap up start today? Because 400 points today, 200 points plus on Friday, that means that we're already up 600 points on the Nifty from Thursday's close. Is the risk reward ratio still favorable in buying the market gap up start? Nooresh.
So on the index, it would not be favorable given that 24,500 itself is a big resistance. We will be very close to it at open. But in terms of stocks, there are many stocks which have not really rallied in a major way and may not see a big gap up even today. So something like an Axis Bank or a Reliance Industries which have corrected and then stayed at the same place. So one can be stock specific. There are a lot of PSUs which have corrected. So if one is looking out for a trade, one can be selective out here, but be more stock specific. Index at 24,500 should face a lot of resistance going forward.
Sandip, same question to you as well. I mean, it is not that all the concerns in the world are over. We still have to deal with what could be called as the global Trump/dollar adjustment. Markets suddenly are looking appealing to everybody. Is the risk-reward ratio favorable for those who wanted to buy? Should they buy even after a gap-up start? It could be an L&T, it could be a Reliance, it could be a large cap, it could be a mid cap, but is the risk-reward ratio, Sandeep, favorable to buy after today's gap-up start? Sandeep.
You talked about the Trump trade. Now, the Trump trade, I don't think is bearish because one, people are expecting that because Trump takes over, dollar will keep on appreciating. His historic, you look back what he did last time and his statements out there, they actually favored a weak dollar to improve US competitiveness. You look at the pick of the US Treasury Secretary and the kind of cost-cutting measures they are talking of, etc. So I don't think it's a bearish trade per se. I don't think that Trump trade is bearish for either the US or global equity markets. What we should fear more is whether in the guise of simplicity, making things simpler, taxes are further increased in the upcoming budget after strong political victories. I think that should be a bigger concern for investors, and that we'll get to know only January end.
Enviro Infra Engineers Limited now proposes an initial public offer of its equity shares. The 100% book built issue is being offered at a price band of rupees 140 to rupees 148 per equity share of face value of rupees 10 each. Issue opens on Friday, November 22nd, 2024. Issue closes on Tuesday, November 26th, 2024. For risk involved and other details, please refer to the Red Herring Prospectus, which is available on the website of the company, SEBI, stock exchanges and the BRLM, Hem Securities Limited.